Well, good afternoon, everyone. Thank you for joining us in the last session of the day. I really appreciate you holding out this long in a rather stuffy room. So we'll crack on. Yeah. So this session is on deep tech, and we've got a great panel of people from all sides of the space today. Quickly, let's do a quick round of introductions. I'm Alexander Antrobus. I run a med tech company here in London in the breast cancer detection space, and I'm going to be your moderator today.
Hi, I am Jonathan Bean, CEO of Materials Nexus. We are using AI to discover new materials, new magnets, new other semiconductors, that kind of thing.
Harry Morgan, a principal at a fund called 7% Ventures. We've been around for around 10 years, investing pre-seed and seed in deep tech. If you saw Wayne on the previous panel, he did the whole spiel, so I won't go too much further on it.
Hi, I'm Slota-Newson, a venture capital investor at Almanac Ventures. We focus on early stage deep tech for industrial decarbonisation applications.
Hi, I'm Gerod Carfantan with Sente Ventures. We invest also in industrial tech. Much of it is deep tech, industries such as food and agriculture, mobility, energy, and manufacturing.
Gerod, keep the mic for a moment because we'll start with you.
Okay.
So let's do a quick run back on what does deep tech mean to you guys? When you hear that term, because I feel like it's blurring these days, what does that mean to you?
I get to be the first to define deep tech. So the classic definition of deep tech, I think, is something that is innovation that is founded by strong scientific or engineering work. It's IP heavy. It's got some strong intellectual property. It is disruptive rather than just incremental innovation, and it's characterized by typically long development cycles compared to other types of technology. For me particularly, though, I look at it in an industrial context rather than like biotech or pure kind of AI, but that's kind of the lens I take.
Joe, you want to give it a go?
Going in line, what he said, yeah.
Okay. Yeah.
That works for me. I think it's a really useful term because now everything that's got like a little bit of software enabling it is tech. So we just need a term that's like that little bit more innovative, really science driven. But yeah, what he said.
Yeah, it's kind of hard to keep adding to it. I guess it's not a vertical. I think that's one mistake people often make. It's definitely not a vertical. It's similar to climate in that respect, that it is something that spans across all industries and like really pushing those industries, the frontier of those industries forward. And the best way to do that obviously is with a step change, like a noticeable 10x that actually defines an impact on the end user.
Yeah, maybe just to add one thing is that in a lot of cases that you have this kind of scientific breakthrough, but you also have I think deep tech companies can be characterized by business model innovation. In that they're doing something that is kind of not previously been done before commercially, and so these are also deep tech companies.
Okay, thanks. Well, so our kind of panel is a little bit split into the kind of the doers on this end and the backers on that end. So let's start with the backers. And I'm particularly interested in, from your guys' point of view, how do you navigate these long development cycles that you just mentioned, Gerod, and the kind of high capital requirements that deep tech demands? Joe, go ahead.
Yeah, I mean, so many things. Okay, but I'll try and be brief. So number one is, I'm in venture capital, so I can't be doing projects that aren't sufficiently scalable and sufficiently capital efficient to be venture backable. That's kind of the one thing. There is, other pathways for projects that need, proper infrastructure investment, that kind of thing. The second is it's all about breaking it into kind of clear milestones and achievement points. So we always kind of find ourselves comparing to the pharma industry, which, again, massively long development cycles, really capital intensive, but that's a sector where it's broken down into really, really clearly identifiable milestones when you hit kind of certain regulatory approvals, certain, whatever it is. And so in deep tech being so broad, you're never going to have those completely comparable stages for every company in every industry, but it's all about kind of finding what those points are in your industry and then making sure that you've got the capital to get to that milestone, and then there'll be the appreciation, making sure that you're really explaining the value that's been created, hitting that milestone, and moving on from there.
Yeah, to add to that, and if I kind of put it simply, instead of talking about TRL levels, which is important to us because it helps measure those milestones. But I think of like the first stage is like, is it possible? And it's the kind of pure R&D, and then can it work? And it's get into like prototypes and things like that, right? And then you start getting into execution risk. Like, can you build it? What are the unit economics? Can it be manufactured at scale? And so the types of capital that align to those are different at each of those stages, and the way you measure it is going to be different. And often the team composition you need at the different stages is different. And I would contrast that with maybe SaaS, where there are milestones, there's things you can measure, but what you actually measure and the types of capital might be different because of the nature of the business. And I'll probably talk more about it, but a lot of where we've been deploying capital, we're on a multi-stage, but a lot of our focus right now is in the growth capital actually as project finance, which is a form of debt that kind of goes along with the equity, because at big scale, equity usually doesn't make sense unless you got the valuations of the $10 billion valuations that some of the AI companies have. Most deep tech companies don't. And if you're making something, building something, and you have assets that can secure that debt, it's a good fit.
Okay. Yeah. Do you want anything, Harry?
I guess just like going back to around like the SaaS point, I think we talk about like development cycles being longer, but I guess the real question is how long is it going to take to get product market fit, right? And I think when you're looking at deep tech, you've obviously got we're not in the business of backing science risk. We're in the business of backing engineering risk and de-risking that period of time in a company's life, especially at pre-seed and seed. But like often it's a case of once that has been de-risked, it's a pretty obvious application, right? If someone builds a computer that's 100x more efficient, that's got obvious applications. Whereas if you're a company, I don't know, like Slack, for example, it might take you 5, 6, 7 iterations for the business to actually find that product market fit. I mean, I think for Slack, it took sort of 9 or 10 years, which isn't untypical of what we would see in deep tech or frontier tech. So I think there's quite a lot of nuance in like defining what a development cycle is versus like a time to get product market fit.
Okay, thanks. So, I mean, another thing that is definitely very prevalent in my life as a deep tech company is the regulatory kind of thresholds that you have to get during that regulatory process. And there's kind of two ways to see that. It's, in some sense, something you have to overcome, but it's also something that defends you, and it's a bit of a moat later on in your process. And it also kind of holds you to good performance standards. So, Jonathan, what is your experience with that regulatory kind of burden in your space, and how do you deal with it? How does it affect your strategy as a young company?
So I think the main kind of question in this is like, do you know exactly how long it will take to go through the process and all of the sort of milestone steps for that process? And how is the world actually divvied up in terms of which regulatory bodies do what things? So before the UK left the European Union, like generally the EU was one block, and so you could understand that from a kind of chemicals perspective, which is our world. And so there's a consortium called REACH, and there are consultants which work within REACH, which you can speak to and then basically pay a bunch of money to sort of tell you exactly what the process is. Now the UK has left, that's slightly different, but there's some similarities. And then the US has a completely different regulatory regime, which is now increasingly more complicated. And so, Japan, etc. So I think the first step is like, do you actually know what it is as a founder? And do you know exactly what will be the milestones that you need to hit during that process is the main sort of first steps, I would say.
And how do you guys view the kind of regulatory side of things when you're considering a company? Like, how much is their regulatory strategy, even if they're way before actually hitting those milestones? How important is that to you as a potential investor?
I'll put my first hat as like an early stage investor and the kinds of things we invest in. It doesn't come up that often, but on the growth stage, when we're talking about things where you have a new process in, like, for say upcycling of waste, industrial waste, right? And then regulations really, really matter, because you're not going to get that factory built if you can't clear these regulations. And the typical things that comes up, I don't know if everyone knows the term FOAK, first of a kind. So first of a kind plant or process or whatever, often the regulatory bodies don't even know what it is, first of a kind, right? So they don't know what rules apply. And that may slow you down, or it may speed you up, or it may slow you down. And if you want to take the more Silicon Valley style of ask for forgiveness rather than permission, also depends on who the regulator is and all that. But that's where we see it, is when you actually need to get into the world and produce something that rather than the lab stage.
Okay, yeah. So something that's also kind of characteristic of deep tech is that it tends to be a lot more adjacent to the academic world. It tends to have a stronger bond to the academic world because, as you pointed out, you're often coming from a fairly fundamental science origin. And yeah, Joe, I don't know if you want to weigh in on this question, but do you feel like we're doing the whole synergy between academia and early industry right? Do you feel like we're doing it wrong? Do you feel like there's better opportunities there?
I think the whole landscape has changed enormously. When I was doing my PhD, it was still a little bit of a dirty word to be working in a startup. It kind of shows my age.
Going to the dark side.
You know, I mean, it was really changing, but yeah, it was really a contrast between the academics that were really excited about getting their inventions out into the real world, really having impact and being useful, and the ones that thought they were definitely better to stay in the ivory tower. So the world has changed completely in that regard. It's pretty universally seen as a great thing to have startups coming from your lab, to see your postdocs going on to running good companies is just as prestigious as seeing them, getting that chair in Harvard or whatever. So yeah, we're definitely doing better. We're definitely struggling in some ways with some technology transfer offices not really understanding the commercial world enough to really support their startups in their engagements with investors, and as they kind of get on the road. There's organizations like Set Squared that are really trying to sort of get around the universities and help them with the tools to do that. But there's still, working with early stage companies, the scientists, the academics, the university, the investors should all absolutely be on the same team, but it doesn't always absolutely feel like
Always
that.
go that way, yeah. Jonathan, you've had first-hand experience of this, if I understand correctly, right, with Nexus. You guys kind of strongly affiliated Cambridge?
Yes. Something I wanted to mention that I should have about the regulatory. So I was invited to the governor of Estonia's house, or no, the ambassador of Estonia's house in London, lives in Kensington, and they have a crazy thing where they basically can super rapidly expedite any legal process that you need. So say if you want to do a new drug or a new thing, you can go to the ambassador and say, look, I want to test on Estonian citizens my product. And they will basically put it through their parliament in a 6-month process. And so like if you want to get super rapid market adoption, go to Estonia. So
Okay, well, there you have it. Hope you're getting your commission from Estonia.
super nice guy, by the way.
Okay, but back to your experience as a kind of university spin-out.
Yes.
What has that been like?
So, it's been Cambridge is one of the amazing places in the UK in that it doesn't have a stringent process like typical universities. I think Andrew Williams did a great report on this a few years ago. Take about 25% as a standard offer in terms of like if you're spinning out a company from Cambridge, from any university. Other universities are significantly worse, and so this has significantly hampered the adoption of or the creation of spin-outs. So I'm guessing you guys, if the university takes 25%, you're probably going to pass on the investment, right? So, Cambridge, there was a story. I cannot tell you the story, but of course, like the process of us spinning out, like basically enabled us to have a percentage which was like amenable for investors writ large, and so. But then, of course, the university invested in our seed round and also our last pre-A round. So. The Cambridge is like a lucky place that you can spin out from in terms of that.
Yeah, I think the standard thing we always think about when we think about interfacing with academia is essentially getting IP from them or getting things that come directly out of labs and become companies. But there are a lot of other aspects to it, right? So we do clinical research trials with UK universities embedded in UK hospitals and things, and that is often fantastic. We have world-class teams here in terms of actually conducting those trials, but often to finance that trial, a key mechanism we need is grants or non-dilutive funding, for example, and the process of getting those grants on time with these academic institutions can often be killer. I mean, we have literally done all the paperwork and had grants completed, and we literally cannot get a signature at the end of a page to potentially get £1 million for everyone. You just can't get a signature from someone in a university. So I think if you've got that type of bureaucratic slowdown, stopping you from accessing non-dilutive funding from your own government, I find that quite frustrating personally. So I think there's a lot of spaces to just like accelerate that workflow. Just speaking from personal opinion.
I agree. Like, but it's definitely worth reading Andrew Williams's report. Like, it went a huge amount to change the thinking within the TCOs. Like, before there was this kind of crazy process where every TCO, technology transfer offices, TTO, sorry, had a completely different process for deciding whether how they would allocate funding, what they would do, and now there is more harmony. So, it's unfortunate for your case, but I think the new companies coming out are actually going to be benefiting from this sort of report which was done.
Great to hear. Great to hear. So another thing that universities do is they supply a lot of talent, right? We get a lot of great talent coming out of our universities, and but I think what's important in startup teams is that multidisciplinary aspect. And so, other than just a couple of nerds coming out with a passion project from our labs, what are you guys as investors looking for in those very early stage teams, right? Is there more that you're looking for other than just that principal founder who's got an obsessive drive and deep knowledge? Like, Harry, what else are you guys looking for?
Yeah, I mean, I think we're early stage, so we're incredibly people focused. We're always backing the founding teams and their ability to sort of negotiate their own conviction, but really drive home towards that vision that they're trying to build towards. I mean, you've got two approaches really. You've got like either really specialize or really generalize. And I think specialization is really important when you're building certain areas of deep tech. So like quantum, for example, biotech, you need to have really deep domain expertise if you're going to go and really push frontier there. But I think in a lot of other industries, and actually when you're looking more broadly at those founding teams, even in those sectors, you need to have people who are commercially focused, who understand the importance of legal work, who understand the importance of what makes an exceptional first hire, and like how to fundraise. I think specifically when you're looking at like hardware, the journey to get to the end goal requires so much fundraising that you need to back someone who you believe is going to go out and raise that next funding round. And that is something you can screen for when you're looking at a pre-seed company. I don't think that this is something that you can do particularly well with data-driven VC. I don't think that is an approach you have to take. I think it is a case of spending time with the founders, seeing them execute. And I think generally that's how we try and approach investing. We spend as much time as we can with the founder before investing.
Joe, a specific question for you. So I'm a super technical founder. I have a great idea. I'm rolling straight out of my postdoc. What's the best profile I can have for my co-founder?
Yeah, so the opposite way to answer that question is what's the worst profile?
That's a good way, yeah. I like it.
Yeah,
I like it.
quite often you see, I don't know, sort of accelerator programs or even like the TTOs at the universities kind of trying to wrap in, they understand like, right, we have to get some commercial thinking into our startups. Let's wrap around this cloud of generic commercial advisors and sort of match make them with our founders, and then like they're going to go off and create great things. And so it's often someone that has, I don't know, not necessarily been that successful, doesn't necessarily have very specific commercial knowledge, and still kind of is maybe, I don't know, at a moderately early stage in their career, and they can't necessarily offer that much. The ideal would be, well, it's so specific on the but generally, certainly getting non-executive directors who have exited founders. They understand the entrepreneurial journey. They understand the specifics of the industry that they're going to be working into. That kind of thing is essential. Otherwise, it's kind of the postdoc that starts a company with their best friend of 20 years who happens to have gone off from a science degree to go and work in big business, and you can kind of come up with all sorts of optimized scenarios that you see very occasionally.
Do you want to?
Well, I think you have, like, the CEO role has to be so adaptable, right? Over time, it changes if you're a pre-seed, seed, Series A, and those skills you need change. I think a really good example from our portfolio, I mean, we were an early check into Oculus VR over in the US, and that started with Palmer Luckey building VR headsets in his basement, as you might expect. Incredibly technical, incredibly gifted at building. Ran quite a chaotic Kickstarter campaign, and then brought in or shifted Brendan, who is actually who we know more personally at 7%, into the CEO role. And that's where they really started to professionalize. They started to build a real culture there in terms of how to build for a customer, how to build relationships with the likes of Sony, with the likes of Meta. And that's how they really built that product into something that users loved, rather than just something that Palmer Luckey wanted to build for himself in his basement.
Yeah.
And I think that role that Brendan then evolved through time is something that Palmer probably couldn't have done. I think arguably has done better since he's been at the CEO of Vanderil, but I think you definitely need to have a balance of skills across the founding team and really have a co-founder that can spot your weaknesses and really like run at the things that you're not good at and can hold you accountable for things that you're bad at.
Thank you. Yeah, you point out an interesting point there. I mean, in some sense, it was strategically in their interest to be flexible about what the leadership team was, right? You started out with one leader, and even long before you were pre-revenue and think about commercialization, you were already shifting your leadership structure to make it work better, right? Which is probably fairly unique to Deeptech. You're moving too fast in SaaS to worry about that. Go ahead.
And then I think a unique thing about Deeptech that is in kind of where it becomes industrial is the shift from being a tech company to like a manufacturing company. Yeah. And then you're thinking about all kinds of problems that you never had to worry about before, like supply chain and cash management and things like that, that is kind of a big step. But luckily, if you've got the capital to like hire in the right people and pay them, you know, at this point you're paying salary and things like that instead of expecting that they're just, you know, betting on the, you know, an exit. And I've also found that founders, you know, the really good founders grow into the role too, right? So, but have to be flexible and adaptable.
I think it's easier for generalists to specialize now than it is for specialists to generalize.
Interesting.
It's an interesting panel.
Okay, so I mean, we pointed out earlier that something key that you guys are looking for are those proof points that these deep tech companies are aiming for that are, you know, in this pre-revenue growth phase. Are they well defined? Are you well financed to reach them, etc.? What are your kind of, are there any go-to tips you would give companies in that journey about kind of ways they can de-risk that even better? Ways they can make that, like, is it about, as you said, having those right NEDs on my board to make it really look like I know what I'm doing even before I get to doing it? What are the other tips you've got?
So I think, you know, practically using resources where you can. So you're at a really early stage and you're not able to raise lots of venture capital. You can often go to, you know, corporate partners that can help, instead of just giving advice or going through an accelerator or something like that. You actually get projects from them to move. If there's a defined, you know, goal in mind and it advances you on your TRL level of your technology, and they'll fund it. That's money you don't have to raise from investors, and I think that's a practical thing you can do. And I think that contrasts that with what a lot of the corporates are doing out there that are, you know, maybe have a CVC or something like that, but it's not connected to advancing you on your actual product milestones. So where I've seen it work well is a CVC that like when you get you sign the like a SAFE with the CVC, and alongside that is like a side letter that said here's the project we're going to work with you on the milestones of the project, and that's a strong partner that compared to just a a check that you could go to your next investors and say, you know, whatever, you know, BP, Bosch, whatever is on your cap table.
Anyone else want to add anything on that point?
Well, maybe building on that, just as much time as the company can spend with their customers, with their relevant industry. You know, you're not waiting till you've got a product and then you take it out there. You're getting as much feedback as you can, building with, understanding what they need, how they work, what specifications.
Yeah, that's a really great point, because I think especially when you're trying to build fast, it can become very easy to, as you point out, lock yourself in your basement and just build, right? When you should be out there talking to people. So we touched on a few things, you know, the burden of regulatory proceedings and how if you speak to the right parliament in the right part of the world, that can be massively accelerated. We touched on integrating with universities and tertiary education entities and how those relationships could improve. But what else could we be doing to improve the overall ecosystem for deep tech? I mean, one thing that comes to mind for me in particular is that when you're out there talking to the VC world, there's a lot of kind of fairly generic VCs, and you often work through a lot of them, right? But what you're looking for is that VC who has the deep tech focus. And some of you guys are really great at advertising that. You know, we're deep tech, that's what we're interested in, don't waste our time with other things, come speak to us. But not all of them. And yeah, just with those ideas in mind, any thoughts on what we could do to foster a better deep tech positive ecosystem, both internationally, but particularly in the UK? Go for it.
I think,
Whoever's keen.
I think the most value an early stage investor can give really is through the capital they're giving you. And I think certainly in deep tech, what we see here versus in the US is that companies in deep tech raise a lot less. I think it's like 4 or 5 times less often at pre-seed or seed. So I think the way that we're approaching this is with our new fund is we're looking to deploy much larger tickets in at pre-seed and seed, really drive those round sizes up, drive the valuations in those early rounds up, and allow companies to go out and execute at a rate at which they can then compete with their competitors in the US. If you raise a 1 million pre-seed in the UK, your ability to execute is so much lower than a competitor in the US who raises 4, 5, 6 million. So yeah, really hoping to start driving those outcomes, and then hopefully seeing more funds coming in with the similar level of conviction as sort of Series A, Series B stage.
Jonathan, did you have an opinion on that?
Yes. So maybe the sort of the, if you go, so I've been to San Francisco a few times. Last time I was there, got to meet people like Jensen Huang, CEO of NVIDIA, and he has, such an amazing story of how he raised his first round, where basically he was introed by the CEO of SIO Logic to Sequoia, and Sequoia wrote a check within, I think, like 1 day or something like this, and it was like $5 million in 1993 or something like that. The speed of execution in San Francisco is absolutely incredible in terms of time from speaking to the founder and like getting to term sheet. Can be like 1 day, I've seen 1 week. Whereas if you look at Europe, in general, that's a lot slower. So I think, getting to decision point, conviction or not, will massively boost the European ecosystem. I think there's also, separately to this, we're engaged with the government around how to expedite sort of UK PLC strategic priorities. So if anyone's interested in supporting us on that journey in terms of policy regulatory stuff, we're producing a policy white paper on this. So the top level of this is like UK PLC can be strategic in terms of how it does procurement. And I think that this will be a huge thing. Like if you look at the US, DARPA, DEFCON, all of these kind of things, like there is like massive alignment of like, this is what the US needs, so therefore let's go out and get it. If it doesn't exist, let's create it. I think Europe and the UK could adopt similar sort of innovation ecosystems. I can go on, but I'll shut up.
That's great. I see some enthusiasm from the far end there.
So definitely true in San Francisco in many ways. I think at Deep Tech, one of the challenges in things that slow down decision making is we're looking at technology that the normal, even GP that maybe an engineer. I was educated as an engineer, and I feel like my technical knowledge is pretty strong, but not in everything and not everything I look at. So that technical due diligence to actually get conviction on something that is deep tech requires some outside help often, and it takes a village to look at a startup, and that is something that when I was doing SaaS was I didn't need to do that, right? I mean, I could get conviction because I could, if you know about the industry, you could figure it out. But this is deeper, and so if we can do that more efficiently, and we have some tools for like using experts, but giving them the tools to give you feedback in an efficient way. Because the experts don't think also like a VC, or what information do I need about about this technology? Not do you like it or not, or what holes can you poke in it, but can it scale? Can it be protected? What are the applications for it? And so giving them the toolkit, giving them a short timeline to get the feedback back, and use that to make a decision quickly.
Can I be provocative?
Please do.
So maybe my observation is like, when you look at the power law returns of the kind of the VC model, does it make a difference at seed and pre-seed? Does it make a difference?
Well, I guess I'm thinking a little bit further along, right? But it's more like Series A and beyond, but I think it can make a small edge if you can do it efficiently, right? If you're taking 2 months to do it, then it's not worth it. You probably lost the deal anyway, right? Someone else has come in.
I was going to say, I think what we've seen through like the 150 companies we've backed is actually it's very rare in the case of a deep tech company that the company fails because the tech doesn't work. It's normally something else. And I think that you can get a gauge of that actually a lot quicker. I think that I completely agree. I think we need to have people who are making much more, who are moving with much more conviction in UK VC. I think it's something that we really struggle with.
And capital buys you time to pivot, right? So if your kind of original idea for the tech wasn't quite going to work, capital buys you time to do a pivot there as well, right? I think there's like a middle ground here though as well in my experience too, which is also, so you want the check written in 24 hours. You guys want a bit of time to do due diligence. Part of the time is in the conversation. It's not even clear what the timeline should be, right? And that I think is something that you can say up front. You can say like, okay, cool, this conversation has been great. I know we don't have the in-house expertise. Can I get 1 week to come back to you on this? I mean, even that is a better conversation than the one of being like, that was a great call, send me your deck. So, yeah.
Yeah, transparency and expectation
Exactly,
setting is important. Yeah.
Makes a big difference. Okay, cool. Well, I think maybe we'll go to the audience first for questions, and then we'll come back and we'll close with the kind of open-ended bit of what everyone's excited about and what technology you're most interested in and what you see coming around there. But let's maybe ask the audience if they've got any questions for our panel associated with anything we've covered so far this afternoon. Put your hand up and I'll bring a mic to you.
So my question is, so if you look at like Boom Aero has been in the news recently with someone going from working at Groupon to creating a deep tech startup. What do you think about someone like taking a dramatic leap to go into deep tech from something that's not really their background? And I know you've talked about specialisms and all that, but what's your kind of advice for that?
Who do you want to direct that to? Anyone who put their hand up?
So I can give my general thoughts about like being a founder, which may or may not be useful. So yeah, Blake's great. Such a great. I think how I think about like great founders is, apologies for the contrived metaphor, but if on day 141 of the 142 days of the Battle of the Somme, they're prepared to fix bayonets and go again, is that the personality type? The founder is, because the founders that are prepared to do that are the ones I think that are going to, on average, statistically win. So if you look at these boom guys, like they went through YC, they just had like utter conviction that they wanted to do this, and I don't think it actually matters. You need to be super smart and super dedicated. I think they're the two traits that I look for when I meet sort of great founders. I want to do business with them in terms of what we do, because when you have that kind of founder-to-founder alignment across two companies, it's such a strong commercial arrangement that I find. So that's what we look for with these kind of partners.
Yeah, so to do deep tech innovation, you have to have people that really understand the tech in your team, but you don't have to have every single person in the company that has it, that kind of level of understanding. And actually sometimes it's really a detriment if everyone's sucked into the detail. What you do have to need, if you're not doing scientific research, if you're building a company, you have to have those people. Maybe they've got a technical background as well, but often they don't. The people that really understand the business opportunity, the business needs, the market. So often having that team of different backgrounds and different perspectives brings the most strength.
I think if you're entering a domain that you've not been in before and you've got to require people with really strong expertise to come alongside you, then really it's a function of how good you are at selling that vision to people who are in the industry and can also understand the way that you see it moving forward. I think that having that contrarian belief of how something's going to move forward is maybe difficult if you're not already close to that industry. But I think if you look at more generic startups, I think it's something like less than 50% of unicorn founders have had experience working in that vertical before they entered that market. So I think having some distance is obviously great in terms of being able to abstract and see how an industry is going to transform, but you need to have those quote unquote softer skills to be able to convince people, including investors, right, to come along like on the ride with you.
Yeah, I think the three amazing skills I've seen in founders like this is if you can raise money, get really good people, and empower those good people to do the technical things. If you can do those three things, work. Right, any other questions?
I recently had the opportunity to have a deep discussion in Italy, and apparently in Italy they have huge patents in scientific work, but they don't have businesses, startups, that many. I mean, if you compare, and I'm looking at you a bit because you did this conversation with the States, what can both startups and academia and the VCs do from tomorrow to be more competitive in terms of speed, in terms of volumes, from tomorrow, not from years from now, but tomorrow? You go to the office, you're a VC or sub, what you can do differently?
So I'll speak to the Italy. So Italy has a, Italy is a great country of brilliant minds, as you say. It does have one thing which holds back innovation, which is that if you work for the government, e.g. you work for an academic institution, so scuola normally, then it basically it stops you from joining a startup company because you're not allowed to own a certain amount of equity. And this is true in Spain as well and other European countries. So, if that was relaxed and so you could own equity as an academic, I think that would go a huge way to opening up the Italian thing. So that's something that could be done right now. Yes.
Right at the back.
Thank you. So over the past 10 years, there's been a shift in the Middle East, at least, which is where I'm from, in terms of it's been less of a source of capital and more of an area of development for startups and innovation. So there's been a lot of existing business models that have been applied to the Middle East, and that's what the trend that's been happening right now. But is there also some trend or direction from Deeptech's founders that you've come across to execute within the Middle East, or are we not quite at that stage yet?
You want to go?
So I for sure agree with you. Like when I first started going to the Middle East, the champions that you would see in the Middle East were copycats of like Kareem, right? Copycats of Western businesses. Now that more and more funding is going into R&D in the Middle East, I am now starting to see deep tech startups come out. Now, what they seem to still be missing, they're strong R&D, but they don't necessarily have the founder mindset, and they're not really thinking globally yet, and all that. So, I mean, I think that's coming with more capital and all that. So it's for sure like every year it moves forward. But I would that's kind of a predictable thing to happen. That with the success stories of the copycats comes experience and the muscle memory of growing and scaling a startup that can then be applied to deep tech if they stay in the region, which a lot of them are.
Maybe there's a few things to sort of pick out. One of the things that's really important for any kind of investment ecosystem is to have strong exit markets, and this is something that the Middle East MENA region is still sort of very much sort of working on, and so and there's several reasons as why it's the case, but this is one of the sort of problems. But I'd say the other thing is that if you look in general at when UAE, Saudi Arabia, etc. like to engage, it's still very much later on in the line. And so so we were out there in February last year, speaking to a load of different people, and it's a strong, vibrant ecosystem. But I'd say the attitude of the founders to build companies which are game changing, which are outside of the MENA region, it is not as strong as it is, say, in San Francisco or in London. And I think a lot of that is so I think the Crown Prince of UAE was talking about this particular issue a few months ago about there is not sufficiently strong motivation in his view for Emirati people because you have a pretty good life, and so that potentially is a reason. Whereas you go to San Francisco and you see the hacker houses and this kind of thing, and you think, well, it's you literally have to make it. So you grind or you have to make it. And so I think that potentially is a different kind of culture which could be induced as well.
I think the thing that's also particularly true of deep tech is talent depth is so important. So, when you get that traction and you suddenly want to scale from the two of you in your garage and you need to rapidly have 8 of you working on your photonic system in the office you can afford under the railway somewhere, you need to know that you can hire those photonics engineers locally as fast as possible. And places like London give you some of that talent depth, London, Cambridge, Oxford, that network. San Francisco is similar. So I think that's also a factor in how fast these ecosystems can grow.
Thanks very much. Hi. My question is just to try and understand deep tech a little bit more in the UK and Europe. So currently based in the US and a lot more exposure to funds out there, and really just how deep tech investment is working out there. So I wanted to get your sense on, in terms of the UK and European ecosystem, are there like sufficient, you'd say, like accelerators and dedicated funds in this space? And if not, why do you think they don't exist?
I mean, I'm from the US, but I would say that there's maybe not as much capital, but but it seems like there's more accelerators and funds like Hello Tomorrow and things like that here in Europe than in the US. There's not on a percentage of VCs that are doing deep tech. It seems like there's more here. It's just not as much capital. I don't know if people are finding the same thing.
Yeah, completely agree. I think we maybe lack people on the scale-up side. So as soon as you get sort of Series A, Series B, a lot of our companies, I think it's something like 30% of our UK domicile companies have flipped to the US since we've invested. And that's because, firstly, customers are there, especially if you're talking about something like space tech, for example, like all of the customers are in the US and all the investors that are going to come in with a big Series A, Series B check are in the US. And to be honest, for our outcomes, we're encouraging our companies to do that.
Maybe I can give sorry, Joe, another provocation. I apologize. I met Frank Pettigas, who used to be one of the MDs of Morgan Stanley, and the Rishi Sunak special advisor last year during his roadshow. So some of the founders were asking him this exact question, and he said, "Do you know there's unlimited money? You just can't get it." And you know, we laugh at that, but actually there's a serious point in this, and like actually the depth of international capital markets for venture capital funds of funds, private equity, public markets is basically unlimited. Like the problem is like being able to funnel that into sort of vehicles here. That is a challenge. So like the UK traditionally has struggled to get Series B funds up and running. There's like only a handful of them. And like the problem is not like that people do not want to invest that into the UK. That's not actually the issue. Is like the structure of like what people are incentivized to invest in is better for other structures like public markets, private equity, infrastructure deals. And so actually the government is actually working on this specific thing, which should open the door towards series like massive funds coming into the UK.
Optimistic.
Yeah, it's around like the mansion house reforms and the amount of pension money that's going into VC. I think that's what people are looking at as being like a real unlock. And if you look at the amount of pension funding in the US that goes into venture capital, it's huge. In the UK, I think it's like 1% to 2%. Not sure the exact figure. I think the worry is that with these initiatives is that the funding is going to go to like the business as usual funds, so the funds that are already well established. I think there's a real risk of mean regression. So companies that are just churning out AUM to optimize for management fee rather than to look for those big outcomes and to actually take big bets with conviction. So ideally, and obviously that's coming from a very biased perspective as an emerging deep tech fund, but some of that money will come to some of the earlier stage players.
Yeah, interesting. Good point. All right, we are down to 5 minutes left. And so I would like to ask the panel, maybe starting with Jonathan, working our way across. What are you most excited about in the deep tech space? What gets you amped?
I'm obviously biased, right? So I don't know. Obviously materials, I think, is like the most interesting. $20 trillion market, you know, it will create industries of the future, elevated to space, like robots with tactile dexterity, like so many things. And we are not even a speck of dust on the way there. So yeah,
I agree. I think it's a cool.
I think if I had to pick one thing, I guess like full stack robotics and the decentralization, I think that can have on production of physical industries.
Very efficient. Joe?
Again, maybe a little bit biased. I'm thinking about one of our portfolio companies, but really excited about deep industrial technologies, which are incorporating kind of new ways of circularity and actually blending different complex industrial supply chains, such as Cambridge Electric Cement, which is actually linking cement recycling with steel manufacture and managing to decarbonize both and saving costs with both. So it's that kind of whole systemic lens needed to find these opportunities.
Yeah, we could go on the whole industrial thing and where things in the same circle versus taking circularity between areas. I think one category, or I guess kind of broad category, I'm really excited about is the interdisciplinary. We talked about interdisciplinary skills, but the bringing technology from different disciplines, biotech plus materials, AI plus materials, right? These things can, and this kind of stuff is relatively new to be able, for sure AI, right? Being able to make advancements in materials and chemicals we could never do before. But using a combination of chemistry and biologics to do circularity of waste and things like that, that can do it much more with a lot less energy and have more valuable commodities that you can produce out of this is really exciting.
Yeah, I agree. I think for me, it's very much that kind of growing intersection between our ability to be able to detect and monitor and kind of turn our biological world into information. So basically computational biology and our massive growing capacity for compute, right? And our ability, those two things are smashing into each other and producing all sorts of incredible industries that allow us to improve health and agriculture and all sorts of stuff. So yeah, for me, I think that's a very exciting frontier. All right, well, thank you everyone for attending this session, and thank you particularly to our panel for your time and your input. It's been fantastic, and yeah, I hope everyone had a great, productive day. The panel will be here for anyone to chat to afterwards if you want, and otherwise I think we just have to fall back to drinks in the sunny courtyard.